Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Today, we dive neck deep into the altcoin market. Our guests provide some of their personal portfolio spotlight projects, as well as strategies they employ in building and reducing positions. We look at technical and fundamental cues to hint at when a project is ripe for a breakout, as well as telltale signs that the ride is over and a new market cycle should be awaited. This show will provide deep insights into how OGs like BAGSY and SOCAL approach altcoins and manage their positions throughout the latest altcoin flurry. You and your bags will not want to miss today's alt-happy episode of The Nest Show. Once again, thank you for joining us, and we hope you enjoy the ride. What The Nest Show is. This is a podcast brought to you by the Birb Nest community, an independent crypto-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not. Trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions.
All right, guys, thank you so much for joining today's episode of The Nest Show. And today's a very exciting topic. We're going to be talking all things altcoins for 2020 and how this market could see continued expansion. Today, we're joined by special guest SOCAL. SOCAL got into crypto at the end of 2013, although he didn't join crypto Twitter for another 7 months or so. SOCAL has helped pioneer spec mining along with others like Not So Fast and continues to mine and train BTC and altcoins today, along with being a founding member of CoinHQ. BAGSY is a full-time crypto trader and analyst and earned his first BTC back in 2014 from an online business, and from there pivoted to this arena in 2017. Guys, thank you so much for being here. SOCAL, how you doing?
Pretty good, man. Thanks for having me on.
Right on. How about you, BAGSY?
Yeah, great to be here. Thanks for having me.
All right. And additionally, we are joined by our esteemed co-host, Sponge. Sponge, what's up?
How you doing, man?
Doing very well, thank you. And what about you, Birb, the one and only? Birb, Adrian, what's good, man?
Yo, dudes, I'm doing great, thanks.
Right on. So we'll get into it pretty fast here because we do have a lot to cover. The altcoin market has seen a dramatic uptick and has generated renewed interest from the mass media. Meanwhile, we've all watched bags bleed over the past many months, and it's great to see some life breathe back into the markets. Sponge, you had some preliminary questions that you wanted to address for the altcoin market. What would you like to ask first to some of our guests here?
I'd probably start with the most basic question, which would be, why would altcoins run at all this year? You know, assuming Bitcoin has a bull run, what would then be the catalyst for altcoins to follow suit? Or if we don't have a bull run, are we still going to see any alt runs this year?
Well, in my experience, the knock-on effect is very much a thing in the altcoin markets. And what I mean by that is that whenever Bitcoin has a huge run, yes, normally the first reaction of alts is to kind of like knee-jerk dump as people try to cash out that BTC, that's pumping. But once the BTC pump starts to lose steam, all that money goes looking, normally, again, not always, but normally a good portion of that money goes looking for new profits, which if Bitcoin's already pumped and now it's stalling out, the only other opportunities for profit in the short time frame would be altcoins. So there does tend to be, that knock-on effect of whenever Bitcoin pumps, eventually altcoins tend to pump as well, as that profit from BTC spills out, and as other traders are looking for other profit opportunities. We've seen that happen many, many times before, and it's going to continue to happen. I mean, markets are all about cycles, and that's really kind of like the biggest advantage the older traders have, is that they've seen all these market cycles play out before already in crypto. So we're pretty prepared, or however you want to say it, for it to happen again. We're more likely to, see the cycle occurring again and recognize it for what it is, and then take appropriate actions.
Right, that's a great answer. Bagsy?
I can't add much to what he said, and I think the biggest thing to take from that is just cycles. People are cyclical beyond markets, like seasons. Everything's a full circle. So, like SOCAL said, I mean, people want to maximize their dollar. So how do you do that? You ride a trend, and then you hop on the trend that looks the most prime for reversal, and it just keeps on going. So yes, the people who have spent the most time looking at charts and being active participants will have the best chance at making money, because they know that everything will eventually not come to an end in the doomsday, but every cycle has its reversal, and the more comfortable you become at hopping through and throughout, the better you are. So experience pays, and I couldn't agree more with SoCal.
Absolutely true. And there's always obviously outliers with altcoins. You've seen stuff like Link or XTZ, potentially Algo, which looks like it might be running at the moment. I mean, do you think, outside of obviously those outliers, do we think we can have a major alt season this year if Bitcoin doesn't break the 20K top?
Well, in my experience, those outliers are actually normally the catalyst for an alt season, because normally you'll have your one or two altcoins that just go on a, relative to the rest of the market cycle at the time, just go on a mega run, and that just kind of pulls up the rest of the altcoins with them. Again, like I said, that knock-on effect, everybody going, holy crap, look at these coins rushed out. So you have people taking profit from the altcoin, the one or two that are mooning at the time, people taking profit and putting it into other coins, looking for other opportunities. And then you also have people who have missed out on that run who are now looking for the next coin to do it. So normally, altcoin season is normally started by one or two mega pumps on one or two coins, and it just kind of sets everything else off. So that's what I'm kind of hoping that this XTZ and Link run is the beginning of the startup for alt season, but we'll see.
So something I'd like to add also is Ethereum, and we're seeing the Ethereum BTC pair break out of a high time frame resistance, which means it's starting to look very, very bullish. And Ethereum has always been a good market for altcoins in general, so I think it'd be important to note that Ethereum has a big hand in that. And so far, it's looking good.
Yeah, Birb, why don't you chime in on this? We have seen a good deal from Ethereum, and a lot of talk about this being Ethereum's year, especially as so many projects are built on it as a platform are really starting to bear fruit. What do you see coming from the Ethereum space and all the projects that have been built on it, especially in decentralized finance and other prolific sectors?
Yeah, sure. So on top of what's already been mentioned, from BAGSY and SOCAL, I think from the purely, let's say, fundamental part, I think it is crucial to mention that we have just started to accelerate, as a matter of fact, right? So we are in the early recovery phase of the multi-year bear market, pretty much, like for altcoins, right? So what I technically noticed the other day for the Bitcoin to altcoin relation, from the technical point of view, is that altcoins are mainly lagging behind Bitcoin, right? So I totally agree on that Bitcoin is like the main leader. That goes without saying. This is like obvious. Yet still, with regard to potential all-time high being broken this year, from the technical point of view, every halvening, right, or halving, however we call that, every halving historically would bring all-time highs by a big measure, right? That kind of like brings that Bitcoin topic to everybody around the world all over again. Okay, this makes it another piece of a cycle. This makes it like of a hyper cycle of a, like, if you go and watch in the chart, the only actual way to see the chart is to go and watch a logarithmic curve, right? Because this Bitcoin is so it's grown so much that it's not even possible to watch on a linear chart in long perspective anymore. So that's kind of like funny, but usually all-time highs brings, like, this is very media favorite topic to go and discuss as well, right? Because this is a huge news. This is a huge news. Just look for what Tesla did already recently, and I think this is a matter of time. This is a matter of time that Bitcoin would get fully back on mouth of the all the media stations, all the newspapers, Financial Times and whatnot. This would kind of accelerate another bubble to come. Okay, another retracements. Like, I call it a bubble because simply every Bitcoin cycle is like, it retraces every time hugely, like, and deeply, right? It retraces every bull market by every 80 to 90%. Like, historically, from what I can remember, the very first retracement was like from $31 to like 1.98, which was probably like above 92%. So it's like a huge correction. It's like a huge retracement, full retracement. Every retracement is always about complete lack of interest. And after it's just kind of like getting out of the accumulation, it's just getting slowly more and more put in media. Okay, that it's just, I don't know, resurrecting just from the grave. And this brings the topic again about the altcoins, right? Because they, like, the moment that the first altcoins like simply were brought to life, these were like also be pieces for big media to discuss, right? Or ICOs. So I think this is yet to come in a very similar formula for this year or for the next for the year after. Like, every cycle is different, right? History doesn't repeat, but it often rhymes, as we say. And this only means that as much as we don't necessarily need to assume that the very same coins that pumped like times 100 or times 10 or or similar, that they will need to perform like crazy this year too, because we evolve as a market, we evolve as a we evolve for the adoption. Okay, adoption is a fact. It's just going on and on. It's just happening more and more advanced. So it kind of like pushes us as a crypto industry to develop like ourselves more and more. Like, the challenges are growing bigger, and for the challenges growing bigger, we need to also face it in a bigger manner, right? So which means that projects built on the new projects coming, these will be the greatest hit, I think, right? So in my honest opinion, like, apart from, because we started talking about it from the Ethereum, I think there would be many more platforms to come that would completely give a big new start to big as massive rallies that we cannot even come up with just yet. That's obvious that Ethereum will be there, okay? It will be there, but the question is what's yet to come that we don't know about and how to search it. Like, don't you agree, guys, on it?
Yeah, some great points there. And it's an interesting point too, because though Ethereum, is flawed in many ways, the brain drain in terms of just developer talent that it has attracted is really significant. And the first mover advantage that it has in smart contracts and riding on the Ethereum platform, can't be overstated, I don't think. So it is an interesting point that, while it is flawed, and there will be, no doubt, next gen solutions to address Ethereum's flaws. I do think that 2020 is going to be a great year for Ethereum and for various projects that have been based on it. But there's a lot of talk about Bitcoin dominance in the market, and charting Bitcoin dominance and anticipating some altcoin cycles as capital flows from the large caps into smaller caps, and then still smaller, more speculative plays in the micro cap market. Outside of Bitcoin dominance, what are some of the other market factors that you look at for anticipating market cycles in altcoins, or anticipating capital flows? BAGSY, why don't you jump in on that?
I'd say just volume, man. Volume precedes price. If you want to have an idea, without looking at dominance, let's say. I've seen many traders use dominance successfully. Personally, I don't really look at it much. I probably should a bit more than I do. But volume. Like if we take Ethereum on the weekly right now or on the daily, you'll see what I'm talking about. And really, it's, to me, the only valid metric to look at. Are people actually getting in or not? And are we I'm a big fan of divergences and price action. I use those together, and basically, if you're not the first in the door, wait for that. And also look at if your coin is on the Ethereum blockchain, look at the top 100 holders, see if they're accumulating, distributing, what are they doing with their money. You could track it, especially if it's a smaller project. What are they doing? And that'll give you a good indicator.
What they are doing with their money, supposing that they still have some money from the holding for the entire bull market, right?
No, exactly. Like, I accumulated some altcoin on Huobi because I've noticed that their top 20 have been accumulating for the last 2 months. I'm not going to mention which one it is, but use the blockchain.
Oh, why not? Share with us.
Maybe another time, but use the blockchain to your advantage. You can trace what the richest people are doing and just follow them. I think Nick Patel he wrote a book in regards to this, and he also wrote a guide recently on how to track it. So take a look at that. That's pretty much that.
Yeah, Altcoin Trader's Handbook.
Yes, but I bought that book, but more particularly, he wrote a free guide 2 weeks ago about how to do it. So I'm pretty sure it's updated.
I was gonna say, yeah, BAGSY pretty much hit it. I normally look at volume, price action, blockchain analytics such as rich lists and whatnot, see what they're doing, and then also from I don't want to say I particularly believe that fractals play out, but going back to the whole being in the market long enough and just being able to identify the cycles, that's also, at least for me as a more experienced crypto trader, that is something I do utilize heavily, is my previous experience. Obviously, and that's not really something that anybody can just go learn or whatever. I mean, yeah, or can just go use. I mean, anybody can learn through experience, obviously, but what I mean is a new trader coming in obviously wouldn't be able to utilize their experience. So I mean, that's something you just got to learn. But as Bagsy said, price action, volume, seeing what the rich lists are doing, the big account holders for whatever you're looking at, just all sorts of little things that you can use to help you kind of determine the most likely place the market's going to go, direction, up or down, whatever.
Guys, I have a question that I'd love to kind of leverage some of your experience with. Crypto, or Adrian touched on it earlier, where history doesn't repeat itself, but it often does rhyme. Both of you have been trading in this market for longer than most participants. And with some of the past cycles, are there any strategies that you successfully used in the past, but then found that as the market evolved, were kind of aged out of efficacy, or are you pretty much trading the same way that you've been trading with refinements here and there? Bagsy, why don't we start with you on that?
Yeah, sure. That's actually a really good question. My strategy has changed a lot in the sense that this bear market really conditioned me to take profit at very reasonable targets. The drawback of this is that you'll typically miss out on larger moves. So in some sense, being greedy can be advantageous to you, but the real thing is discovering when that is. And right now, looking at altcoins, I think now's the time to be greedier than most. Shoot me if I'm wrong, but I've noticed that my profit-taking strategy has changed to a more swing style, meaning I'm willing to hold a trade for a couple months now, whereas in 2018 it would be a day or two max, or I'd look to get in and out only being USDT and Bitcoin, and just take advantage of certain opportunities that I saw on the chart. So that's one big thing that changed. And I think Inverse Bruh is someone who's been advocating for the higher time frame at the moment, meaning to really zoom out, be patient with your entries, and let the real run play out. And I think he's right. So that's something I've been changing in my system.
Right on. What about you, SoCal?
I've actually gone the other direction with it, so to speak. I've actually gone down to some lower time frame trading. Last cycle, I was more in the gonna buy or mine and hold, wait for the top, sell the top. That's great and all, but that very obviously has big risks of not of missing the top, and now you're stuck with a bag. So I've actually gone and adjusted my strategy a bit from less long-term holding to more short-term swing trading. I know BAGSY was saying swing as in months. For myself, my own personal definition is swing is, few days to a couple weeks of holding at most. But anyway, like I said, so I've actually gone down on time frame a little bit, not trading whole size positions on low time frames. That's dumb. But I am trying to capitalize on these waves better, these lower time frame waves better than I did last cycle. And as BAGSY was saying, that the danger of taking profit too early because you've been conditioned by the bear market to take 20% or whatever. Well, first off, I want to say everybody on crypto Twitter loves to flex and say, "Oh, you didn't get 1,000%? Fuck you!" Blah blah blah. But here's
the loser.
but here's the thing, guys.
Wait, so you're saying you didn't get 1,000x?
In my past few trades, no, I have not. But I've been happy because here's the thing. How I look at it is the average Wall Street yearly return is plus 12%. So as long as
not even that.
Exactly. So I take 12% as the top end, so that's what my target is. So as long as each trade beats 12%, I'm happy. Quite honestly, because being an idiot and trying to use 100 times leverage to get those 10,000% returns, that's how you blow out your accounts and you get wrecked. So
I don't know. Ask BAGSY, bro.
But also to play on what BAGSY was saying about people being afraid to hold longer because of the bear market and miss out on future profits. I always keep a moon bag that is at least 25% of my original position. Yeah, so just making these numbers up. Say I had 1,000 Bitcoin, okay? And
SoCal, following up on what you just said there, what does it feel like to have 1,000 Bitcoin?
Say maybe 50 to 75% of it at the most.
Sleeping pretty good.
At the very bare minimum, I would hold 250 in reserve and never touch them, at least in that direct moment in time. While I'm trying to trade the local time frames, I would not touch that bag of 250 Bitcoin, just in case it does decide to pull a 500% candle later on or something like that. I always keep a moon bag of whatever coin I have, just in case it wants to do something crazy stupid later on.
SoCal, following up on what you just said there, what does it feel like to have 1,000 Bitcoin?
I don't have 1,000 Bitcoin.
Sleeping pretty good.
Freaking wish, man.
It kind of leads me on to another point, just coming off what you said there, SoCal, is that, obviously the average person who's trading this market is an inexperienced trader. I think the average Bitcoin wallet holding is like 0.02 Bitcoin. So it's not a lot of money. And I think a lot of these people are they're inexperienced traders and they're looking for those huge gains because they need that almost just startup capital to their trading account. And I think that's where a lot of the sort of the risk aversion comes from, with people wanting to hold on for these 1,000 X's, and they're not willing to take that sort of incremental smaller profits. They don't want to compound slowly over the course of a few years. They just want that flat out 1000x, whatever it may be. And the thing I find quite funny on crypto Twitter is it's usually these kind of like no-name people who are out there sort of taking the piss out of maybe accounts that are trading 100 times their capital, who, if you're sitting there trading 100k and you make 10%, then you're pretty sweet for a while there. And I think a lot of these people, obviously they're trading like $300, and if they've made 100% money on their money, is still nothing to them, but there's certainly an immaturity to this market.
Exactly. And to add on to that, like I said, these quote unquote small percentage wins, they add up quickly. They really do. They compound very fast. And it's hard, especially as a new trader with small account, not wanting $10,000, $100,000, $1 million right now. But the biggest piece of advice I would have is stop looking at the dollar amount. Stop.
Totally agree.
Just focus. Don't even look at your Bitcoin amount, really. Just focus on percentages, getting positive percentages up on the board. That's it. That is the name of the game, positive movement, because that equals profit, that equals more money. And when you stop worrying about the dollar amount, stop worrying about the Bitcoin amount, and you just look at the pure percentages, just pure numbers, then it becomes a lot easier. And like I said, those small interest wins, even on say $100 account, they're going to compound extremely quickly. Because if you're taking plus 10% today, plus 5% tomorrow, plus 12% next week, plus 25% the week after, over time, give it 6 months, and all of a sudden your account's worth $10,000 that you started with $100.
And see how well it corresponds with one of the most important factors to be a fucking successful trader, which I personally consider to be the patience, right? And the whole problem with with being irrational for the low portfolio traders is that they want to get rich fast. Okay, they are pressed. They won't invest any more than 1K, right? Because they are afraid to do so. But they end up putting like I don't know, $200, right, or $300. This small peanut is obviously just to feed the whales, right? You don't even any profit you get, you just simply get swallowed by the fees from for the commissions from the exchange. So we end up doing even less money on that. But all in all, these percentages add up perfectly, what you said, right? And as long as you keep adding up these percentages over the time, this is what is a guarantee for the getting super, maybe not even rich, because this is, if you're a good trader, you would just simply, it comes sooner or later, okay? But this is the patience over adding up your portfolios, even if they are not 100x, even if they are not 2x, even if they are 12% per average or 10% per average, real estate yearly income, right, yield, or I don't know, stocks in general, ETFs, see what ETFs offer, right? And this is completely, perfectly corresponding with what you said.
Oh yeah, and to add on what you're saying about fees, that's something new traders love to market buy. That is the worst thing you can do. A, because of slippage, and B, because you're going to pay more in fees. If you use post-only orders, you're going to pay about half as much in fees, and you're not going to have any slippage. So, and then it goes into the whole thing.
Yeah, unless you use our ref link, right? It gives you 10%
off. Hold on. I'll put my ref link in the description. Hang on.
Too late, bro. Too late.
No, but and then as you're saying, the whole thing about patience and whatnot. I was actually talking to somebody earlier this morning about patience, and their issue is they have since they do this, trading full time. Their biggest issue is they are 100% of the time always glued to their charts. Even when they're out of the house, they're on mobile on their charts, and it's just kind of consuming them. I'm like, man, look, you just got to learn how to set your stops and your take profits, and trust them. and just go do something else. Doesn't really fucking matter what else you go do, but get away from the chart. Go do something else. Go play video games. Go drive around. Go do something else, and just learn to trust your stops and take profits, and stop trying to chase those 1,000%. Be happy with your 10, 20, 30%, whatever you set your take profit as, and it hits. Be happy with that. That's another thing. That hindsight trading leads to revenge trading, and it's bad. It will make you wreck yourself big time. So you just got to learn to trust your stops and take profits, and just go do something else, distract yourself.
Yeah. So what I always repeat to my friends, to my guys, is like, can you imagine Warren Buffett sitting in a basement trading 1 minute charts on 100 leverage? Can you imagine that? Obviously not. And the success comes, like the real damn wealth comes from having the actual strategy, which is obvious, right? Which is meeting your personal goals. That goes without saying, but this comes over the time, which is the patience, right? And I believe I've already mentioned that, like on another podcast. But what Warren Buffett does with regard to picking his, maybe his trainees or the stocks he invests in. I don't know. He's just doing some kind of like an interview using this marshmallow test, but not this marshmallow test like from the management field, but the marshmallow test with regard to who's able to accept double the reward like after some period of time, right? So the question is whether you prefer to have one marshmallow right now or two marshmallows like in an hour or so, right? And he would invest money. He would invest and trust only those guys who would pick the two marshmallows after some time, right? Because this ability to delay your reward, this ability to be patient for the greater reward, just see how it sounds. Like this is what we are talking about, right? This is the game that patience. This is pretty much like supporting pretty well. And on another note, like strictly from the economic point of view, like there is an opportunity cost. Watching your charts, being glued to your charts, watching 1 minute charts is purely unproductive. Okay, it's purely unproductive. You just waste up time, and time is money, because other than watching charts, you could spend that time, for example, learning on how to get fucking rich, right? Instead of just watching senseless, pointless 1 minute charts, right? So this is the opportunity cost. So you're not only losing time, but you're actually just losing money on losing time again. So it's like a double loss in this case, right? And on top of that, you end up losing money anyway if you're playing 1 minute chart for a long time. Right. So it's like an even triple loss on that.
And then your relationships could begin to suffer, and then yada, yada, yada. So I'm trying to find balance in my life as well. So I'm spending less time on the charts. And I think Cold Blood Schiller made a good thread about that today. So yeah, all that to say, guys, try and spend less time, be more efficient with it, and keep your friends and family, keep contact with them. In my relationship, I'm spending too much time on a chart, and no, but it's actually a discussion that I've been having with her. So I'm trying to get better in that aspect myself. So it's a really good point you guys bring up.
Right on, guys. You've been very generous with your time, and I want to continue to respect that as we wrap up. Open-ended question here, and we'll start with BAGSY, then SOCAL, then Birb, and end with Sponge. But you have choices between two questions. So one, any kind of open-ended musings or anything you'd like to share with our listeners about the market as we close up this episode, or two, is there any specific sector of the market or altcoin project specifically, or a short list of projects that you're looking at for big growth in 2020? BAGSY, let's start with you on this.
Sure, I guess I'll go with the latter. I keep it simple. Look at Ethereum. Just pop it up on the weekly. Take a look at the volume, and yeah. But all that to say, not financial advice, but try and be smart with your money, and that could mean many things to many different people. But generally speaking, I'd advocate for holding at least 50% in Bitcoin. And this is only in cryptocurrency. Like, every person will have their own how should I say, investments. Some people might be 90% in stocks, 10 in crypto. Some people might be 100% in crypto. It really varies from person to person, but I'd say that what helped me last the longest is having a strong foundation in Bitcoin, and my trading really got a lot better from there, instead of just, being overexposed to a similar asset class, like a bunch of altcoins that are all going to dump because Bitcoin pumps 20%. So yeah, all that to say, take a look at Ethereum. The first mover's advantage is super important. Don't ignore it. Ethereum is not going anywhere anytime soon. And I'm not an Ethereum advocate. I'm a trader. I couldn't give less of a shit for any platform, but I would stick with the top ones. But then the drawback is that you might not make as huge a multiplier. You could find a $5 million market cap that goes 100x much easier than Ethereum would ever go 100x. So then again, it comes down to what's your risk profile, how old you are, all that kind of stuff.
Right on. Well said, Bagsy. And what about you, SoCal? What are you looking at?
One of my biggest problems I had when I first got into crypto was getting married to my bags. But I've gotten much better at that. So now I just try to trade what moves. There are a couple of things that I don't mind bagging longer term. If anybody, yeah, exactly. I was gonna say, if anybody follows me on Twitter, Tezos is one of them. So gotta show that Tezos. I hope you're proud of me, Jeebus. Anyway, that's so there's a couple coins that like I said, they seem to be pretty solid projects that I don't mind holding for some spot positions. Obviously not leveraged futures, because holding leveraged futures for long periods of time is stupid when you consider the funding rate, but that's a whole nother conversation. So anyway, moving on to, like I said, what I'm looking at, Tezos is one of them. There's a couple others. I hate it because everybody's already talking about them. So it's kind of like it sounds like I'm just regurgitating CT, but it's like I actually made my moves long before anybody on CT was babbling about these coins. But all right. Algo is another one. I'm holding a spot position on. Beam. There's another one that I'm actually, as the mining market is more favorable, that's actually one of my quote unquote spec mining plays, so to speak. I can obviously mine it profitably now, but like I said, whatever I mine of Beam, I'm just holding for later on, see what happens, because I think that it could go much higher than what it is right now. But that's just my personal opinion. So, that's kind of what I'm looking at. But basically, as Bagsy said, not getting really super married to any bags or anything. Just going to try and trade whatever moves,
Of course, and well put. What about you, Adrian, on the same topic?
I think optimizing like risk-wise and return-wise, your like on average portfolio, it should always compound and include like different classes of assets with regard to the risk profile that they offer, right? So I am personally type of trader that like first of all I do trade mid-time frame swings, okay? I call it like a hybrid because I participate actively in the long-term run, obviously. While at the same time taking profits on the major swings on the secondary trends, right? I think this is simply like the safest. Like I think that taking profit, pretty much like more frequently than not, is what keeps the security, let's say, of your profits in a way. If you stick around, to potential high risk, high reward, gems or picks, right, for too long, it may happen that they pull up some exit scam, for example, right? You can never exclude that unless they are fully registered as securities on the SEC, or even not that. You cannot really rely on them 100%. So I personally prefer to keep it more safe than not. So I decide to participate on taking profit on the major swings on mid time frame. Now, so about for 1 month to 3 months, let's say. But at the same time, as I said, my portfolio includes all classes of assets with regard to their risk profile. So I do own some high risk, pieces, right? Medium risk and low risk. I do compound different classes of assets with regard to Ethereum, for example, right? Ethereum or Ripple or Litecoin, like all of them are good buys in my honest opinion for major runs, for the correction that is just going on, and I will make my sure to go and re-enter these on the next days, pretty much. But on top of that, I would go and look for 1-2 picks or even 3 picks. We just need to remember not to over diversify that. Now, from the medium, let's say, cap list, okay, medium market cap list, and I would definitely like to see in my portfolio also coins like Algo, which is fine too, Atom, right? Some very liquid assets from Binance. Okay, I hate illiquidity. I would not put big money if the asset is not liquid. I don't feel safe. I don't feel safe putting a lot of money in low sats either, for simply being barely available to and barely possible to manage your risk on that. If the slippage is built in, right? If you trade shitcoin that just trades on free sats, you have like a stop loss for 50% loss already, if at all. So and on top of that, to just sprinkle with these magical stars, magical gems your portfolio, I choose to pick like a couple of gems that we simply like do review in the bulletins monthly, right? And that's another story. So coins like Morpheus Labs, MITX, right, or Beam already mentioned, or Dero, or Nizo, or Veracity, very freshly reviewed pick, right? All of these, I think, may nicely push your portfolio to some greater limits. Okay, over like as long as they don't expose any exit scam, which we obviously hope won't happen. So all in all, this is my point on that.
Right on. And Sponge, did you want to lead us out with anything?
Sure, yeah. I mean, my strategy is sort of rather long term. I'm primarily, if for those of you that know me, I'm primarily a momentum trader, and I automate a lot of, 90% of my trading is automated. I trade a lot of moving averages, things like that. But most of my long term success in this market, at least, is really tied to Bitcoin. I'm not a Bitcoin maximalist or anything like that, but I'm in it for the long term with that, and I have a strategy that's slowly sort of accumulating me more Bitcoin. But that's an automated thing, so that might not be for everyone as such. But when we're talking in regards to altcoins, there's only, in my opinion at least, there's only really 3 things you need to know. You need to know the trend, you need to know when it's breaking out, and you need to buy at the right time. Obviously, trend is up or down. It's not sideways. Sideways isn't a trend. But sideways is probably one of the greatest things you could look for as an altcoin trader, in my opinion. Like, pull up a daily chart. You see coins going sideways for a long time. Then it's, a lot of the time after a downtrend, it's going to be an accumulation. So what I'd look for personally would be a breakout of that trend. And obviously, I'm a moving average trader, so I use the 50 and 100 MA on the daily there. And quite simply, just look for that breakout and then wait. Don't buy that breakout initially straight away. Wait for a pullback. Ordinarily, in my altcoin trading, I'd wait for a pullback to the 50 MA, and then I'd just buy that. And sort of touching on something that SOCAL mentioned earlier about looking at these 1000Xs and really just taking like realistic profits. Most of my trades just have a preset profit taking strategy. I set profits at certain percentages, and they either get hit or they don't. I've got my stop loss in place. The risk management is there. I'm always preaching the same thing to people who ask me, is that say you've got $1,000 account and you're looking to trade altcoins. Well, find a strategy, but manage that risk. If you wanna be exposed to a few altcoins and you've got $1,000 or $10,000, then based on a $1,000 account, put $250 into a trade. 5% stop loss, you're risking 1.25% of your account. So, it's easy to break down and split into 4 coins, and you can just ride that trend and take, realistically modest profits. My maximum profit on an altcoin trade, at least on my 4-hour, would be 20%. And you can find that exact same setup 100 times in a month. So really just, for me at least, don't chase those those huge gains. Just take modest profits and compound that stuff.
Right on. Well, I'm sure that our listeners will agree that there is plenty of value to sift through in this podcast. And I want to thank each and every one of our guests and my co-host Sponge for being here with us today. Bagsy, thank you so much for being here, man. Appreciate you.
Thanks for having me, guys. I appreciate the conversation.
SoCal, same goes for you.
Thanks for having me. Appreciate it.
And Adrian, thank you for being here, brother.
Yo, thank you all, guys. It was a pleasure.
Sponge, yeah, thank you so much, brother. And listeners, we will see you in the next one. Thanks so much, guys.
Just as a previous 2 episodes, guys, if you remember clearly, I promised to randomly choose the winners for the last of our giveaways, focused around our recent 50% discounts and promotions on Twitter for every the Birb Nest subscription, exclusive subscription program. This giveaway regarded the 10K celebration for the Discord members. For now, at this very moment, I believe we're having like almost probably somewhere around like 12K. So we're growing fast in this. And I'm definitely willing to choose one random pick, one random person winner, lucky winner, to go and receive the Free Slick branded hoodie. Okay? And yeah, let's do this. And let's see who this is right now. Let's put the link. Let's mark that we are not a fucking robot again, and that we are a taxi cab drivers. Okay, there you go. And pick a winner. Hey yo, it's a Polish guy. It's my bloodmate. And Paweł Kaczorowski. I'm very happy to announce that you're the very lucky winner for a free damn hoodie, bro. And it would be such a pleasure to talk to you in Polish. And yeah, all the best. Gratulacje, Mordka, najlepszego. Just to confirm. And it's all legit. Cool? Yeah, congrats and enjoy, and let's get in touch.
I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to connect with our guest on Twitter, where the official team handle is @TheBirbNest, where SoCal can be reached @SoCal_crypto. Birb is @CryptoBirb. Sponge is @SpongeCoinBob. And I'm @BenjaminT1717. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us by visiting thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. After much demand, we are excited to finally introduce a host of delicious merch, starting with my favorite, an assortment of comfortable hoodies. You can now sport your Birb Nest pride in style with our branded goodies. Be sure to visit thebirbnest.com/merch for more info. And don't forget to check out @CryptoBirb on Twitter for ongoing merch giveaways and more ways to participate with our community. This podcast has been brought to you by the Birb Nest. Thank you, and trade on.